Hey everyone, welcome back. Stacker here. In today's numismatic news and information for the 29th day of May 2023, I'm going to take you over to JM Bullion so we can check out those spot prices. But before that, huge shout out and a big thank you to all of our channel members. I really appreciate all y'all's support. Really do. Now over here to JM Bullion. Looks like gold is up to 27 to 1957.41. Silver down 13 cents to 23.40. Platinum up 4.43 to 10.44.48. And palladium up 99 cents to 14.75.99. You look at the credit card PayPal payment of the American Silver Eagle 4510. It is in stock, and less the difference there of the ask. You got 21.68. So it looks like it went down 2 pennies over the weekend. Now, bullion sales at the United States Mint. Yeah, we're at the end of the month here, and I don't believe we'll be seeing any more additional sales for these American Eagles, or even the Gold Eagles for that matter. But I hope I'm wrong. Now, over here to CNBC, there's 2 articles I want to share with you. And we're not only going to be reading the articles to you, but I want to show you the language that they're using. It's really interesting, okay? And some of the theories that they use may or may not be that sound, all right? So let's go ahead and touch this. Now, this is published January 19, 2023 by Li Ying Shan, all right, at Li Ying Shan. Now, title of this article is Silver Prices Could Touch a 9-year High in 2023 with a bigger upside than gold. And why is that? Well, because silver, okay, is in a deficit. What does that mean? Well, there's more demand for silver, okay, than there is supply. Just look at the American Silver Eagles. There's more demand than supply. And what is that doing? Yeah, it's increasing the premiums. That is incredible. So there's 2 key points here to this article. Silver could, right, definite possibility of a firm maybe, could hit a 9-year high of $30 per ounce this year and become a better performer than gold. Now, here we go. Insufficient supplies of silver, as well as a tendency to be a better performer than gold in periods of high inflation, are the reason. So, better performer than gold, better performer than gold. That's 2 key points they're taking away here. All right. Here we go. Prices of silver could hit a 9-year high of $30 an ounce this year, possibly outpacing gold prices. There you go, comparing it to gold 3 different times in the one article so far. Seems really redundant, right? The last time silver spot touched $30 levels per ounce was in February of 2013, according to closing price data from Refinitiv. All right, there you go. Let's keep on keeping on. Insufficient supplies of silver, as well as its tendency to be a better performer than gold. Wow, they keep hitting that one hard. In periods of high inflation, the key driver supporting the outlook, analysts told CNBC. Silver has historically delivered gains of close to 20% annum in years of high inflation. All right. Given that track record and how cheap silver remains relative to gold, it wouldn't surprise to see silver head towards $30 an ounce this year. Will we see $30 an ounce this year, folks? What do you think? I don't necessarily think that's impossible at all, but I do believe before the election, we'll probably see somewhere closer to $17 or $18. I always think that things get better before the election than get worse, but that's just my theory. All right. Now, though that will likely offer significant resistance, said Janie Simpson, managing director at ABC Bullion. Silver spot prices notched a record high of $49.45 in 1980 against a backdrop of 13.5% inflation rate, up from around $4 in 1976 when the rate of inflation was cooler at 4 or 5.7%. And you remember in 1976, all those U.S. Mint silver sets? Yeah, that's one of the reasons why, okay? The precious metal last traded at $24.02 per ounce against a backdrop of an inflation rate of 6.5%. Now, let's face it, folks, the inflation rate that they're comparing here is not the same, I would imagine, as the inflation rate here, because some of the data that they use and some of the to compile their data, right, is not necessarily the same as it was back then. Now, this link could actually probably notate that, but I didn't check into that. But I'm going to go with it's not the same. All right. Silver shortage. Here we go. And I think this is one of the things that we all need to be paying attention to, especially if you look at this. Okay. I spoke with the Mint spokesperson, the assistant director, and I asked her point blank. I was like, hey, is the Mint going to face planchet shortages here in 2023? She didn't give a verbal answer, but she nodded her head yes. Okay. Wow. Yeah. Okay. And is that the reason we're seeing 900,000 for 4 months in a row? And will we see a 900,000 number for June? I think absolutely. Let's keep on keeping on. Now, silver is in a shortage, and there's a notable downward drawdown in the available physical stocks held in New York and London physical hubs. Okay, that's absolutely true. We can see that with Michael Silversqueeze on Twitter. He's constantly telling us how much silver is being drained out of the COMEX. All right, And that's a lot, constantly. And sometimes there's other people that look at his numbers and say, wow, at this rate, silver will be gone by such and such date. All right, this is a big deal because we are really seeing a lack of physical silver in the market. We really are. All right, let's keep on keeping on. Shields, head of the metal strategy of precious metals, added that silver is expected to post deficits of more than 100 million ounces over the next 5 years. Yikes, 100 million ounces, folks. Yeah, with industrial demand spurring the tight supply. Now, let's face it, if industry does slow down because of recession, I imagine that could be the thing that drives the silver price down. It says the largest segment of silver demand is industrial, which equates to almost 50% of total demand, she said, calling for a base case of silver prices to climb to $28 with a bullish case of $30 or more. And this is Randy Smallwood, president of Wheaton Precious Metals. I'm very bullish on gold, but I'm even more bullish on silver. Now, that demand is expected to grow more than 15% over the next 5 years. That's huge, folks. He said, hinging on accelerated industrial demand from automotive and electronic applications. But what if we are in a recession coming up, right? Is that going to be the same percentage over the next 5 years? I don't think so. Silver is a material commonly used in the manufacture of automobiles, solar panels, jewelry, and electronics. Now, if solar panels take off and they do the double-sided solar panels, that's additional silver. That might actually be good. Now, there's no silver lining for silver supplies. We had peak silver supply back about 5-6 years ago. Silver production on a worldwide basis has actually been dropping, and we're not seeing as much silver produced from the mine, said Randy Smallwood, president of Wheaton Precious Metals. According to trade group, the Silver Institute, and we've talked about this report before, the supply of silver from mine production in 2022 was 843.2 million ounces, which was still shy of the decade's peak of 900 million ounces in 2016. The supply of silver, which is largely produced as a byproduct of lead, zinc, copper, and gold mines, does not generally respond as quickly to demand. So what they're saying is they don't really go out and focus on drawing the silver out of the ground. They actually go, okay, well, let's go get some gold. Hey, we found some silver. Let's go get some lead and zinc and copper. Oh, we found some silver. All right. So it's a byproduct. It's like, hey, we got some silver out of that. Yeah. So it's kind of an afterthought, all right? When silver prices go up, it's not like the silver mines can increase production because the silver mines only supply about 25% of the silver, Smallwood said. Okay, specific silver mines only are 25% of the silver, adding that the market often relies on lead zinc mines to satisfy the higher demand. However, they maintained that while it wouldn't be surprising to see silver touch $30 an ounce, he does not think that the price will hold. He calls for prices to stay comfortably over $20 per ounce. I'm very bullish on gold, but I'm even more bullish on silver, Smallwood said. Here we go, headwind for silver. This is what could draw it down. However, recession fears could lead to softer industrial demand, which may cause silver prices to drop as low as $18 per ounce. Now, what would you do, folks, if it was at that price? All right. The biggest risk to silver prices is inflation falls away faster than expected. Pally and Simpson's seconded. If the Fed continues to tighten and if inflation falls away more than rapidly than the market expects, that will be a headwind for silver, she said, especially if the economy heads into a recession, given the larger share of silver demand tied to industrial output. There you go. What's interesting is they're trying to, couple or make a relationship between higher interest rates and a lower price for silver or gold. And that may not necessarily be the truth, okay? Here's another article, and this is published from May 29th, okay? That's just today. Gold prices slip. What do you think when you see that slip, right? A lower level, a new station, a new standard. U.S. debt limit deal, Fed rate hike bets. All right. So they're saying that gold is slipping on a Fed rate hike. Okay, but is that the case? All right, they've made that argument here as well. But is that the case? And maybe younger people who have not maybe learned the history maybe feel that way, but that's okay, because that's why we have older data to go back to. Now, it says here gold prices edged lower on Monday as tentative deals sealed over the weekend to suspend the U.S. debt ceiling, coupled with jitters around higher for longer interest rates, dampened demand for the non-yielding metal. Now, do you think really demand has been dampened for gold? No, I don't think so. I don't think so at all. So we're going to question that word. Now, spot gold was down 0.1%. Yeah, that's really not that low, is it? I mean, it's still almost at all-time highs here. It's just funny the words they use, isn't it? It's just beating up on gold. And is all the central banks buying gold? Yes. but they're making it sound like the average investor maybe shouldn't buy gold, right? It's really interesting, the words they use. Now, hurting gold's appeal as a safe haven asset, U.S. President Joe Biden said on Saturday he had finalized a budget agreement with House Speaker Kevin McCarthy to suspend the $31.4 trillion debt ceiling until January 1st, 2025, kicking the can down the road. And that deal was ready to move to Congress for a vote. More of a data on Friday showed U.S. consumer spending increased more than expected in April, and that inflation has accelerated. I told you, I'm telling you, I don't think inflation is done at all. I think it's good. I mean, look at the mint. They raised prices on all the products, not just the silver products. They raised prices on clad, but not all the clad, like the American Innovation and the Kennedy half dollars and the Native American dollars. Didn't raise the price on those, but everything else I think went up substantially, almost like 7 to 15%. Incredible. And that wasn't the only price hike that I think we're going to see this year. Now, it says here, the report raised the chances of a 25 basis point hike by the U.S. Central Bank in June, that's just in a few days, to 65.3. I don't know what that means. And rates staying there for the rest of the year. I don't think so. I think they're going to keep on keeping on, go up, up, up and away. Now, the odds of a hike were as low as 17.4% chance just over a week ago, show how expectations for a Fed pause have been abandoned. So, look, if they were low that much just a week ago, it shows you that the information that is out there is not reliable. I mean, think about that. Less than a 20% chance, and now we're looking at a 100% chance, just about. Yeah, makes you wonder, doesn't it? Now, it says here, gold, which offers no yield of its own, tends to fall out of favor among investors when interest rates rise. Yep, here we go again. So they're going to make that assertion, and I'm going to go ahead and go here to the effect of Fed funds rate on hikes on gold. Now, folks, do you think it's pretty arrogant to believe that the Fed could actually have an effect on the world market prices for gold? I don't know, but maybe they think they can. I don't know. So here we are in Investopedia, and it says the effect on Fed funds rate hikes on gold by J.B. Maverick, and is updated March 17, 2022, fact-checked by this person here, reviewed by that person there. Now, it says here, many investors and market analysts believe that since rising interest rates make bonds and other fixed income investments more attractive, money will flow into higher yielding investments, such as bond and money market funds, and out of gold when rates move higher. Therefore, when the Federal Reserve raises its benchmark federal funds rate, weakness in gold should follow. However, there's little evidence that gold is consistently weakened by federal funds rate hikes, or treasury yields. Despite some negative correlation in the 2000s, there are far too many instances of gold and interest rates rising together to say that high interest rates cause gold prices to fall. So there you go. So yeah, ultimately the relationship between gold prices and interest rates is uncertain and unstable because gold is traded on a global market. Yeah, subject to forces far beyond the reach of the Federal Reserve. Here are the key takeaways. I think there's about 5 bullet points I'm going to read and then keep on keeping on. Some market watchers believe the higher interest rates send gold lower because of increased competition from higher yielding investments. Yeah, maybe. However, a long-term look through historical data reveals that no relationship exists between rates and gold. Throughout much of the 1970s, gold prices rose sharply just as interest rates moved higher. Bingo, ding, 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 ding. The 1980s saw declining interest rates and a bear market in gold, right? Up together, down together. Other factors beyond rates, such as the supply and demand dynamics seen in most commodities markets, are likely to have a greater impact on the long-term performance of gold. There you go. So demand, all right? Who's buying gold? China. That's right. Now, off to the plus ones today. Bam! It's Ecclesiastes 6, 7, 8. Why was 6 afraid of 7? Because 7, 8, 9. Now, a man's toil is from his mouth, yet his wants are never satisfied. What advantage, then, has the wise man over the fool? What less as a pauper who knows how to conduct himself among the living? Well, both the wise man and the fool must toil for what they achieve. The difference lies how they utilize and appreciate the fruits of their labor. And speaking of labor, this is Blue Collar Man, Long Nights by STYX on 99.9 KOIN Coin News Radio. Stacker out.